are here for yet another live at Realty Podcast with Marc Andre. Thanks so much for joining us this week with regards to everything to do with mortgages. You need to have your mortgage to get going when you're looking to purchase a home. So today we have the expert in that field. So want to ask you a few questions. And by the way, thank you so much for coming on here today on such a short notice, actually. So let's talk about mortgages, because I think one of the things that people are looking for, should be looking for prior to getting out there, is really mortgages, right? To have the money in terms of like they need to know what they can actually qualify for. And so how much money can they get from a lender, right? Last week we discussed about what are the differences between mortgage brokers and mortgage representatives that are that are representatives at the banks. So this week I want to get more into detail in terms of like what it is that mortgage brokers can do, like if we can talk about details of like terms and things like that. So with that said, if we are looking to purchase a home for the very first time, can you maybe give us an overview in terms of like, what does it mean? Like the interest rates, like people often go out there shopping for interest rates, and there are so many different options now. There is 30-year, 25-year, like what does it all mean? A lender, B lender. So maybe let's get into that, if you don't mind. Let's start off with like the interest rates.
Okay, so thank you for inviting me. Just to start, so for the interest rate, so there's two types basically. There's fixed rate, and then there's variable rate. So the fixed rate means your payment will stay the same during the duration of the term. So like let's say you go for a 5-year term. So for 5 years, your payment for your home will stay the same. If you're like, I want to gamble, I think the interest rate will be better, then you go variable. Variable follows the Bank of Canada. So when it goes up, you pay more interest. When it goes down, you pay less interest.
Okay.
So like people, like it's the debate. Like basically right now with the interest rate coming down, a lot of people are thinking like maybe I should go like variable. And then when it's like the bottom, which is hard to know, I'll go fix.
Okay.
So that's like for the interest rate. Then there's the term and amortization. So let's say in Canada, I would say like we're more like free market, because we choose the term and we go with shorter term. So we'll go like with 3 years term or 5-year term, meaning like at the end of the 3 years, you renegotiate your mortgage. So you'll find, do I want to keep going with that interest rate, or I want to try something different? In the US, it's different. There, it's like 30-year mortgage. So it's the same thing for 30 years. So it's a little bit different at that point.
It's kind of like, the way I look at it is like, when you're purchasing a car and then they tell you, okay, like your monthly payment is going to be this much. That is what it is for that period. Like whether you go with 4 years or 7 years or what have you, right? Yep. So in the States is like that. So whatever you locked up, that's it. You can't open it. I really don't know how it works in the States. Maybe you can if you refinance or whatnot. But in Canada, this thing opens up every whatever period, like term, right? Every 3 years or 5 years, you get to renegotiate with the lender. And now when you do that, when the 3 and 5 years open up, does that mean that you then have to also again qualify, or no? You don't have to qualify after 3 or 5 years, do you?
Yeah, so like basically like when you qualify for mortgage, you're being stress tested. So like basically if you go with the same lender, you don't have to do that stress test.
Okay.
But if you were switching before, you need to stress test yourself. But since the interest rate went so much and they were pushed to help people get better deal, now they removed the stress test. So if you're just like switching lender, you don't need to do the stress test. Which
if
is
you're
very,
switching lenders.
yeah.
Now, what about if somebody's just getting into the marketplace? There's the stress test is still there, right?
Yeah, it's still there.
Okay.
The stress test is
And
basically
explain what that is. Yeah, good.
yeah. So stress test is basically to make sure the market is stable. So instead of like testing if you can afford the home with your interest rate, what they do is they look if you can afford the payment at 2% over your interest rate. So if you can afford that, then they will lend you the
I
money.
remember when that thing kicked in, everybody was like, "What? This is crazy! It's nuts!" and so on and so forth. And then what's funny is that I mean, of course, now we look back and we're like, "Oh my gosh!" Like stress test didn't even cover some of the increases in the rates, right? Yeah, but like. That's exactly what happened, right? At the beginning, everybody was like freaking out about the stress test. But then when the market did flip and then interest rates started to climb up, a lot of people, like what the interest rates end up being at were much higher than that 2% increase, right? Or a stress test, I should say.
Yeah, exactly.
So,
like
yeah.
let's say like some people had, let's say in 2020, 2021, they got like 1.5%, 2%.
Yeah.
And right now you're looking at rate like in the 4%. So
it's crazy.
it's like way over like.
Let's talk a little bit about that too. So there were some people that were able to lock in a rate for, let's say, under 2%, right? And then they were transferable, right? So like some of the lenders, some of the banks were saying, yeah, no problem. You can, when you sell, you can actually transfer it to somebody else, that rate, which was amazing. But here's what the truth behind that was, though. A lot of the times when we found homes that were offering that under 2% interest rate, we found out that the lenders wouldn't just like give it up as easily, right? They made it almost impossible for the new owner or new buyer or prospect buyer to take over that interest rate, which is right. It was crazy. So
yeah, so basically like when you have like so there's two options like with your mortgage, and this is like really something you need to look. Like a lot of people, they'll look at what can I get for the best rate, but often with the best rate there's a lot of restriction.
Yes.
So the first one is transfer if you can transfer your mortgage. So if you look at the fine print, it always says like it's transferable if the lender agree. So if the lender doesn't agree to it, then you cannot transfer to it. And I would say one of the main condition is the property needs to be worth more than what you're going away from.
Isn't that funny? Like as you're talking about lenders, I just see a lot of similarities between how lenders operate, like banks operate, and how builders operate. Builders, the same thing. Like they have this thing called like assignment that they make the home purchaser pay for so that they can like assign it to the next person if they don't end up closing this pre-construction home when it's built. But they just almost make it so impossible for that assignment to take place. For example, you can't advertise it on the MLS, those properties. I had this lady years ago, like a couple years ago, she was in tears on the phone with me wanting to sell, and she did purchase a great property and it was totally sellable. And the only reason she reached out to us is because we are really good at selling homes off market. Because otherwise, if your tool is just using the MLS, then forget it. She wouldn't be able to sell. But yeah, so I just
like
thought
whatever
that was
is
really
your situation.
Yeah,
like whatever is your situation. Like you're buying a home or you're financing, you need an expert with you. It's something that will bring you so much money and protect you against all the like I would say like scam or like just
really it's a scam.
Yeah,
really
like-
it's a scam. But we're like trying to like be
Politically correct.
Yes, politically correct, but forget that. You know, why should we be politically correct? This is the truth. Like, I mean, the way the builders operate and the way some lenders operate is just unethical. And like, you know, but there's no way of going about, you know, dealing with them because they have all of these different things, legalities that's protecting them. So you can't, as a consumer, you can't go against somebody so big like a builder or a lender, right? And that's why you need the experts to make sure that that doesn't happen. They take more like preventive measures than like, you know, things happen and then, oh my gosh, now what do we do, right?
Yeah, and the agent will take your side, will protect you. So
Yeah.
instead of having like, I've seen like people, they're coming and they went to the builder and the builder told them buy 2 properties, but they have like a fixed income and there's no way that they can afford 2.
Wow.
So if they had like an expert with them, like an agent,
Yeah,
like the
that's-
agent would have said like, no, don't do this. Like this is very risky.
Yeah.
And now like they didn't take someone and they were like in big trouble and they got sued after. Like the builder right now, they're going after clients that don't close. So
Yeah. That's it. So it's like they welcome everybody, but then it's like for them to actually get them to the closing, it's like, okay, whatever. We took the deposit. At the end of the day, we haven't released the title to these new people. So then they end up just, you know, if they end up not closing, well, they take the property back and they can sell it for a lot more or less. And if it's less, great. We're going to go sue the original purchaser that didn't close for the extra money in addition to the deposit that was forfeited, meaning you lost your deposit. So it's so crazy. But anyway, so going back to, sorry, I just, like, as you were talking about the lenders, I was just like, wow, there's a lot of similarities between what lenders do and what builders do. Because at the end of the day, they've, like, it doesn't bother them, it doesn't faze them or anything when it comes to like the issues that you have. It's not their problem, you know. They've got the money, they've got the product, so who cares about the consumer? And that's when you need people, you need the protection of people that are working for you. And oftentimes people don't know that there are people out there. I mean, that's our profession. That's what brings our bread and butter to the table, right? We are there to protect you. And that's the beauty of Canada, because with every industry, there's always some kind of a regulatory body. There's always somebody there to represent you in that field, that I find very, very interesting. So,
and just to add to this, like it's not only like new build, it's like any purchase. Like let's say you go at the bank will only offer you the rate. So you're like, well, I think they offer me the best rate, with which they don't. And it's the same thing with buying a home. Like you'll have your neighbors like, oh, I'm going to sell you my home for that much. And you're like, oh, it's a good deal. But you don't know. You need to have the expert with you to tell you like, yeah, he wants to sell it to you because he's going to make a huge profit on you. So like, bring me in. I'm going to negotiate the price.
Oh my gosh, neighbors. Neighbors are something else. Yesterday, I know we had this conversation before, but like yesterday, particularly, I went to a listing appointment, and these guys have moved from Toronto, which is a bigger city. Prices are much higher. They owned a semi in Mississauga. And apparently the neighbor came to them and said, hey, I love your home. I want to buy it. Because, you know, usually it's the semis, by the way. I don't know what it is at semis, because the other family I talked about, they were also semis. Anyway, so the one next door said, yeah, I love your property. I want to purchase it, you know, sell it to me. And they end up selling, nice people, certain cultural background that, you know, very nice people. They were like, yeah, you know what, we promised this, sure. They end up selling their home $200,000 or more undervalue to their neighbor. And so, and I said, oh my gosh, why didn't you get in touch with so-and-so agent? Similar situation is happening right now with one of our upcoming listing, where the neighbor is like, yeah, I really love the property. Well, yes, I'm the agent. Let's have a conversation. Let's make sure that the property is being sold for fair market value. Because we are regulated, we need to make sure that the home is sold fair market value. We can't just say, oh, yeah, go ahead and accept whatever, right? We need to be able to, protect you and treat you with integrity. So, yeah, anyways, going back to what we were talking about. So, in terms of like, so we've discovered what it means for the 30 years, how every 3 to 5 years it will come open.
And like just to mention, so like we talk about the term like every like 3 year, 5 year you change.
Yes.
And then the amortization means it's the period you're gonna pay fully the mortgage.
Okay.
So it's between like usually 25 to 30 years. Now they extended the 30 years to first time home buyer because they want to help them afford more. If you spread over 30 years, you can afford a bit like a more expensive home. So they did that for a first time home buyer.
I remember years ago when I, with my family, we purchased a property. It was 40 years.
Yeah.
How crazy was that? Thank goodness.
So you
they
still
changed
have
that.
like, so basically if you go like the alternative side where they help people that doesn't fit with the best lender,
Yes.
they will go like 35 year, 40 years. And then like private, what they do is interest only. So it's you just pay interest, you don't even pay the principal. So the longer you spread, like, yeah, it helps you to afford more, but it's a bigger risk because let's say you pay just interest, that's mean you could have a mortgage forever. So like it's horrible.
Yeah. And is there any like 10 years? Can you take on a mortgage for 10 years?
Yeah, so basically you can do any amortization you want. So when it comes to, let's say, people that it's been a while in their home, they can take 10 years, 15 years, they can choose.
You know, the crazy thing, like last September, I went to the Philippines, right? And like it's like within 5 to 10 years, you pay off your mortgage, you're done, and it's your home. And it's crazy, like, I would imagine people that are abroad and they watch what's happening in North America, that we end up paying mortgages for half our life. Seriously.
Yeah, they made it like basically the price keeps going higher, and to like feed it, then they just extend it. So it helps more people jump in and pursue it.
Yeah. But not to say that I am like still against home ownership. Like home ownership still by far is the number one way in which a lot of people become millionaires. Like real estate is the path to wealth, to building generational wealth for sure. So, okay, so that's interesting. So 25 years to 30 years. And then if we're going into the alternatives, we can get 40 years or what have you.
Yep.
Right? Okay, that's interesting. Now, we talked about down payment. I know there was a bit of a change though with the down payment. So just last year or a few months ago, where up to now it's like 5% for the first 500,000, but then from 500,000 to that other number, it's 10%. What is that other number?
Yeah, so it used to be like basically to have an insured mortgage, the property needed to be less than $1 million. But since the price went up so much, now they extended it to 1.5 million.
Okay.
So that's very helpful. Like instead of like, putting a huge down payment on 1.5, you can put much less. So.
And something that a lot of home sellers don't realize is that if you own a property that is over the 1 point, sorry, what did you say?
1.5.
1.5, yeah. If it's over the 1.5 million, then that is, people are going to have a hard time having to come up with that down payment. Because what happens after 1.5? It's now uninsured, and you now have to put in 20%, right?
So it's
crazy.
Yeah, so you're looking like like let's say 1.5 is like 300,000.
300,000.
But if you go like insure, you would have to pay 125,000. So it's much less than
Yeah.
that amount.
Yeah, because the 100,000, the $1 million will be 10%. So it's 100,000 plus 25, so 125,000, as opposed to 300,000.
Yeah.
It's a huge difference. Like that means like you can now get furniture now.
Yeah. And what I always tell like people, like often people have a lot of money. If you look at that type of property, so
Yes.
instead of like sinking all your saving and investment into the property, you can save it and then buy like a income property or buy a second property. You can do like much more investing, which is good. Like you need to be diversified. So.
Yeah. Now, part of this conversation is also to help people have a better understanding when it comes to mortgages and like the process, right? I know like you take on the application and then so initially when they contact you, you take an application over the phone and then you just ask some questions with regards to like how much debt you have, how much money you make, how much savings you have, et cetera, et cetera. And then you do verify all of that information, right? And then you send it over to the underwriter, which is they work for the lender. Now, some of the things that happens, which I think it's important for viewers, at least our viewers, to know, is that if they end up like, so when that happens, that verification process happens, usually that happens before they submit an offer, or is it after they submit an offer for, you know what I mean, for a property?
So basically, like when I take the application, like there's two steps. So one is like the pre-approval. So if you do like the pre-approval, you're looking at like basically just saving a rate. So they don't look at your document. They just say like, okay, like with all the information you submitted, we're gonna guarantee you an interest rate of, let's say, 4%. Then you have the approval. The approval happens when you make the offer. So when you make the offer, then we submit for an approval. At that point, they will be looking at documents. They will verify like the income documents. They'll look at your credit, and they'll look at like your down payment. So like that's like they're very different. And the down payment.
Yeah, let's talk about that, because that part, a lot of people get confused. A lot of people are like, so where does my down payment need to come from? Can I just grab it from somebody's account or what have you? Can you talk a little bit about that? Because oftentimes people say, yeah, I have this much, but maybe it's somewhere abroad. So talk a little bit about that, please.
So the lender, basically what they do, is they look at like the 3 months history. So any large payment, they want to know where it came from. So let's say you brought money from abroad. Well, you're gonna have to show money where it came from abroad, like the bank account. Was it from like your family abroad? And you'll have to provide documentation. So that's something to always remember, the 3 months rule. And then if you keep like moving like from one account to the other, you move like 5,000 there, 10,000 there. Well, the lender will ask documents for each of those transfers. They'll want to know the history, the 3 months history for where the 10,000 came from where the 5. So it's a lot of documentation. So I always advise, like, let's say you're gonna purchase a home, like try to like have it in one account so it simplify like the documents you need to provide. If it's from family, it's more like straightforward, where basically you'll need a gift letter.
But not from every family, right? Like it can't be my cousin's brother's sister, dad. You know what I mean? Because you have to understand, a lot of us that are like from other cultures, we call everybody family. So what is that family? What is that relation has to be?
So that was like before, it used to be much more extensive.
Okay.
And then
really? Okay.
And then they realized like, well, this is not like really the purpose of it.
Yeah.
So now, like, basically what his family is like mom,
First degree.
yeah, first degree, like mother, fathers, siblings, children, and
Okay.
grandparents. So it has to be like, like,
Okay, that's
like
good. Children or grandparent. Okay, that's good.
Yeah.
Grandparents are still included. Of course, grandparents always give money. That's so nice. All right. All right, that's good. So then, okay, so they can. So that has to be from the first degree, and then money coming abroad. We always have to make sure that we know where it's coming from. There's got to be some kind of paper trail. And then also the other thing is making sure that you have to show history of that money being in your account for 3 months. Yes.
Yeah, like you need to, whatever is your down payment, we need to have like 3 months of history for this.
Okay.
Yeah.
Okay.
And I would say, like, the other thing I want to mention, like when it comes from abroad, often certain lender, they'll ask for 6 month statement. So instead of like just the 3 months, it's 6 months. So it's something that you would want to move your money before, because like if it's like 6 months, it's a lot of like history, lots of documents.
And how do they like verify the bank statement from another country that is, let's say, in another, the write up is not the same. It's not like you know what I mean, Roman letters. It's another language. Does it have to be officially translated statements, bank statements? Is that what they're looking for?
Yeah, it's like the same as immigration. So everything needs to be translated.
Wow.
So they don't know official like translation. So
Okay.
and
Interesting.
and basically they look at that because they want, it's for the sanctions. So for terrorist financing and money laundering. So there's even certain countries where like they will just decline it. So you have to have like an expert to tell you, okay, like tell your mortgage agent, mortgage broker, like I have money coming from there. Will it work, or like it's not gonna work because it's something that it might like impede a deal if it comes from certain countries.
Wow. Okay. Very interesting. So so with regards to the family letter gifting, they would just basically write a letter that, let's say, I'm gifting this much money. Is there a limit to how much money they can gift? Like my parents could gift me for my purchase. Is there a limit or no?
No, it can be like the full amount, like no problem. So and
good.
it's not like any letter. Basically, the lender, they all have their template. But it's basically but it all has to be like basically like the name of the person, the address, the name of the gifter that they're giving without
it's
interest.
funny because like last time I talked about the fact that lenders are really looking for, I mean, anything, not just lenders, builders, anybody. They're just looking for that like perfect box. You remember I talked about that perfect box? Really, really, it's that, and that's what I find our job is, to really, help and guide the consumer to say, okay, this is like the framework that you need to work in to make sure that you fit here. Okay? Because if you're a little bit out, you're not going to fit within this framework, right?
Yeah.
So that's really interesting. So, okay, so we have the down payment now. Going back to so let's say we have the down payment, going back to the whole process. They verify all of that information, right? We put an offer, they gave you a pre-approval letter. Now, oftentimes I also see that because you communicate that a lot with us. Oftentimes I see that you say that there is also there's sometimes conditions, right, to those approvals, right? Of course, by the time that they get the commitment, they can go ahead and remove the conditions, is what we call the financing conditions, right? But when they do remove the condition and they say that's fulfilled, there are conditions there. Like, for example, can you give some examples of those conditions for our
So like basically like one that comes up often will be people, they'll say like, I'm gonna make a down payment of 50, but at the moment of the purchase and when we submit, they have like 30. but they expect to receive a gift or have like more money coming in. So like the condition will be to provide the bank statement showing the 50,000 down payment.
Okay.
So that will be one. Sometime it'll be like updated like documents, like in term of employment letter, pay stub. Often they want the most recent pay stub. So if there's a period between the pre-approval and when you purchase, they're gonna want updated documents often.
Okay. Very good. So then some of the lenders, now not all lenders are the same, right? One of the things that we find, for example, for us, when we see certain builders give a lot of extra incentives, right? Again, I'm telling you, there's so many similarities that I'm seeing between lenders and builders. It's crazy. So like a lot of the times when I see like builders give all kinds of incentives, right? I tend to me, that kind of like puts a little bit of a red flag, because like, why are they giving these kinds of incentives, right? Yep. There's something that's not good. And I think like that's very similar to what sometimes you say, where it's like certain lenders are giving like amazing rates, but then they're not the bestest. Can you give an example of like something like that? Obviously not to divulge any exact client's information here, but like to just say like, some lender that, even we don't have to mention the name of the lender, but it's like just like the situation that's happened, and what is it that they do, why is it that they drop the ball, why is it stressful, etc., etc. Can you maybe...
So like I would say like
you know what I'm talking about exactly.
Right? So like basically like in term of lender, like often let's say they'll give you the best rate, but it's like they call it a no frill. Like there's basically like
like the grocery store.
Yeah, like no.
Oh my gosh. Okay.
And it's basically like you cannot basically change. Like there's no transfer. There's no like passing the mortgage to someone else. Like the only way out of it is to basically sell the property. So like those no frill like is horrible. And even like the honest lender, they say like don't go with that. Like it's not like worth it to get like that best rate is not good. The other thing, like you'll see a lot with the online lender, they'll say like, oh, like we're gonna give you like 3% for 6 months, and then after you're gonna go with a normal interest rate. So they just want to entice people. But what happened after the 6 months, you get an horrible rate. So whatever you save in terms of money for that 6 months, you're gonna pay double in the following like term, like for the 5-year period.
Seriously, because that happens as well with like with sometimes, I don't know, buyers. We have buyers that say that, I have an agent that is willing to help me purchase a home, and they give me a cashback when I end up purchasing a property. Well, that agent, maybe be doing this like part-time, and that agent is definitely not protecting you. How many horrendous, horrifying stories I've heard of buyers that made such purchases with such agents, and what kind of situations they found themselves after being in a property. So one situation is, these people, they purchased a property and during the winter months, and then winter in Canada, your backyard's full of snow. They had no idea how horrible of a condition their backyard was in. And so they purchased this property, they overbid, got this property, the snow melted, and they realized, oh my goodness, there is at least 30 to 40, maybe even more thousands of dollars worth of upgrades needed or work needed to get it to just be a normal, just sodded lot in the backyard. So, but guess what? They got $2,500 from their agent as a cashback. Like, I mean, is that great or what? Then on the other hand, But and by the way, these are some people that I know. Like they're actually yeah. So let's just leave it like that. As I know, they know who they are. And then they told me after, oh my goodness, Anna. Now we also find that there is mold growing, and because all the fans are going right into our attic. Anyways, I've also had like yesterday. One of our like newer agents here said that they like something similar happened where these people these buyers, they decided to knock at somebody's door, okay, that was already with an agent, listed with an agent, because they were hoping to deal directly with the seller, and so to kind of like backdoor the agent, you know what I mean? So they did that, and then the seller called their agent, hey, yeah, I want to cancel, whatever. Even though there is, I think that agency didn't know their rights, but it's kind of good that they didn't actually touch it because we have all these different clauses as a brokerage. But anyways, it's good that they didn't touch it because here's what happened. Apparently, the person that purchased that property, well, guess what happened? That intentionally wanted to deal directly with the seller so that the seller can save money and he could save money. Years later, found out from the city that there was no building permit ever acquired by the original seller. So the whole house needed to be demolished and brought back down to ground zero. Is that crazy? So like they save what, like 5, 10, 12, I don't know how many thousands of the $10,000. But guess what happened? Now they have to build a whole house. How much is a whole house worth to build? So it's like these little things that people think that, oh yeah, let's just, cut corners. But those corners are really there to protect you. That's the thing. And I'll be the first to say, as an immigrants are the first people to get to get hurt by these cutting corners because they think that that's a way to get ahead, but actually they find themselves moving backwards. And I can tell you stories of my own family before I was doing what I was doing. So it's like it does happen, but part of the reason why we're doing this is for people to kind of know that you need an expert on your side. You need somebody who can like really have your back and give you the right advice and make sure that you're protected, you're getting something good, and that there's not going to be any issues moving forward.
Yeah, and you want the one that's gonna negotiate the price the best for you. So
100%.
like if like the person knew like all those issues, then you negotiate the price down and you just walk away. So
absolutely. Yeah. In negotiations, let me tell you, a lot of people say, you should negotiate when you're purchasing, right? But it's not. I personally don't believe that. The people say you make money when you're buying a home. I don't believe that. You can also make money when you're selling a home if you have the right negotiator on your side, right? Yeah. And I just find like negotiations has to be innate. I don't think it can. I don't think it can be taught. Well, it could be taught, but like somebody who is born with the negotiation skills will always outdo somebody who's learning to negotiate. Don't you think? I don't know.
It's like poker game. Like you need to be in the field to really understand and how it works. It's like a psychological
maybe with
game.
practice. Maybe with practice. Anyways, okay, we'll leave it at that. So let's talk about the rest of the stuff when it comes to purchasing a home. So like, okay, somebody basically went ahead and made a purchase and everything's good to go. Oftentimes I'm asked this, like, okay, so what do we do? Like the time between them actually having an accepted offer to the time that they get the key, which we call it the closing date, they get confused and they're like, what do I do now? And, when do I end up going to sign documents? And do I go see the mortgage broker or do I see you? Like, what happens? Like, is there something that they should do? We talked last time about things that they shouldn't do. Don't go shopping, don't go spending money, don't go, But like, what is it that they should do between this period from the mortgage perspective? Obviously, we talk to them on the, you know.
So like basically it's just to provide like when you submit your file, they'll do like a commitment, which is like an approval with like basically waiting just for confirmation with the documents. So you just have to provide those documents. One important points, like in terms of expert, like we're talking about like a realtor expert, mortgage expert, like also like the lawyer. The lawyer has a huge key in the transaction because between the approval and the closing, the lawyer will prepare all the documents for the closing. There are certain lawyers that that's their work to do the closing, but they do everything to make the deal fall apart.
Yeah.
So you want a lawyer, an expert that's gonna help you like facilitate everything as well. That can work with your realtor and that can work with your mortgage broker.
I love that. And you know what? Stay tuned because we are going to have a real estate lawyer on here, which I'm really excited to talk to as well. But absolutely, it is the lawyer. The lawyer makes sure that things are good to go, and we'll leave that episode to them to discuss it. All right, good. Okay, so so let's talk about also people. One of the type of people that are becoming a type of buyers, I should say, that are becoming more and more relevant in Ottawa. Because they weren't before. Before, Ottawa was more like, mostly government employees or, just employees or, people in the high-tech industry. But I find that more and more, a lot of the buyers out there, home buyers out there, whether it's first-time home buyers or investors, I find them a lot to be self-employed or like business owners. So for those kind of people, what can we maybe like change focus and talk a little bit about them and like how they can go about purchasing? Because I remember when I first came to Ottawa, I'm self-employed, and you're self-employed. So like when you come to Ottawa and you just start your business as a business owner, I was having a hard time qualifying for a mortgage. So what are the things that if somebody is about to jump into this entrepreneurship wagon, what is it that they need to know to qualify for mortgage?
Okay, so when it comes to like self-employed people, you really need to have like a mortgage broker, a mortgage agent. And the reason why it's specialized, like there's a lot of specialized program from the lender and each of them do it differently. So you want someone that knows them and can make it work the best for you. Usually like for self-employed, you want to have like a 2-year history. Like that's what it goes. Like you need to have at least 2 years as a self-employed. If it's before that, there's exception in certain aspects where we have like an IT field, like in Ottawa, where people like they work in IT and then they're like, well, I can make a lot of money myself, so I'm gonna start my own business.
Yeah.
So in those cases, there's program where they will consider like your income as self-employed and then your income before. They'll do like an average.
Okay.
So that's one thing. The other thing is, let's say you're looking at like, when you do self-employed, you're looking at your T1 general. And when you do your T1 general, when you do your like tax income to CRA, you're trying to pay the less taxes. So you're doing like all those expenses to minimize the revenue that's taxable. But the lender, they don't look at that way. For them, they want to see what makes sense. It's called a stated income, where I have like a business, let's say Uber driver, like what is the expenses that are really like relevant to that work, and then subtract those from the income. So instead of, let's say, making income, I don't know, let's say 30,000 a year, you could be making income like 100,000 a year with that stated income. So that's where like your mortgage broker will really help you figure out exactly how to present your self-employed income so that you can get like the most money possible in terms of financing.
Okay.
Because like in terms of like self-employed, let's say you're brand new, let's say you're 1 year on, you'll have to go towards like alternative lender, which I would say it's like 1% higher in terms of interest rate. So they're not ideal. So
Okay.
sometimes people that start self-employed, they'll go to the alternative side and then for 1 year, and then after 1 year when they have the history, they'll switch to the A side with the best interest rate and those programs.
Okay. 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 Now talk about stated income. What's stated income?
Stated income is basically like I will take all your income and then I'll subtract the expenses. And it can be as simple as I'll ask for your bank statement for the past year, and then I'll look at all the income and all the expenses, and that will what I will go with for in term of income for your file for your financing.
Okay. What are the things that you subtract from our from the statement?
It's all depend of like
Is
the
it
business.
like business related stuff, or is it like more like personal related stuff?
Well, like let's say like I have like one right now where basically they have their stated income and in their expenses for CRA they did like own business, but the own business is their property.
Okay.
So those expenses I can remove all of it from. I don't need to consider those expenses because it's not true expenses. It's expenses created to minimize your taxes.
Okay. Okay.
So it's like those type of expenses where
Okay, that makes sense.
not like it's not for you to run the business. It's
Okay.
extras.
Okay. That's really interesting because oftentimes I think people, I mean myself, if I like we don't realize that, the whole point of like what you're doing has nothing to do with like taxes, right? Like I mean, we are doing all the calculations that you're doing is to really make your income or like your ability to pay this loan visible to the lender, right? And oftentimes it's like when I say that mortgage brokers, it's important to find a good mortgage broker that can really articulate your situation the best to the lenders, right? Because oftentimes it's not just like paperwork, oh here you go. This story makes a big difference. This story is really where it's all at. And honestly, we should do another, I think, episode just on stories because it is maybe the next episode will just focus on the stories because that is important. And again, I find a lot of parallelism between that when it comes to mortgages and real estate. The story counts. So next week, we'll talk about stories. But in the meanwhile, I want to say thank you very much for joining us this week. Really, really insightful in terms of how, as self-employed, we can get qualified and move forward to our dream of home ownership. I mean, why would you get into taking such big risk of starting a business and to not be able to enjoy the fruit of your labor? So this is very, very good information. And again, Ottawa is ever so evolving, and we have more and more business people coming to Ottawa, which is really exciting. I love that. I know it can be scary, but it's also very exhilarating, very rewarding. But it does require a lot of work, a lot of patience. But it's if you enjoy it, if you have the passion for it, it's definitely helpful. So Again, thanks so much, Marc Andre, for coming here. We really appreciate it. And you know what? Let's talk about stories next week. Yeah. All right? Okay, awesome. Well, thank you so much, you guys. We appreciate you. See you next week.